precious metals for more than just inflation. Featuring Monex and the world-renowned commodities research firm, the CPM Group, led by Jeffrey M. Christian.
My name is Sean Brazney, Sales Director for Monex Deposit Company. I have the pleasure to be here today with Jeffrey Christian, who is Managing Partner and Founder of CPM Group, one of the many research analysts over there at CPM Group, joining us today. Thank you for being with us today, Jeffrey.
Yeah, it's good to be here. Thank you. It's always a pleasure to be with Monex.
I really want to talk about silver today and be somewhat specific with silver. And before I get into too much with silver, I just wanted to cover some ground with you on some information that I point investors to quite often through CPM Group. And when it comes to silver, you really should know why you want to buy silver and have a really strong why. It's one of the main reasons why we're here with Precious Metals for More Than Just Inflation report, as well as, of course, all the reports that are authored by CPM Group for Monex, but also that you can find through cpmgroup.com, and the reports that they have available to them is trying to get you as much data and research as we can so that you can really find out a good why. Why do you want to buy or hold precious metals? And when we talk about silver, there's a lot of wild opinions that kind of can come into light when we talk to investors or potential investors in silver. And I really want to bring up the long-term data that Jeffrey has and that I like to reference. Jeffrey, you talk about a 40-year history of data there in the precious metals market with your background all the way pre-1980, which is amazing experience that we have here with us on that kind of a time frame. But you mentioned a 40-year time frame holding a core position. And I really wanted to talk about how important that core position was before we get started on silver. If you can kind of share some of that data with us.
Our view has always been that we're very big on diversification of assets. So, you don't go heavily into stocks and heavily into bonds. You have a diversified portfolio that includes some stocks, equities, bonds, but also includes precious metals. And gold and silver are excellent portfolio diversifiers. They're coordinated with each other, but they're not correlated with stocks and bond markets. So they are excellent portfolio diversifiers. And what that means is that they help smooth out the value of your portfolio or the value of your wealth over time. So there might be periods of time when stocks or bonds or both are weak and precious metals may be doing well. And what happens is they take out the lows, the spikes down that you would have in your portfolio's value if you were only in stocks and bonds. That's one of the reasons. Within the precious metals complex, we like diversifying, and silver is diversifier for gold. It's a little bit more volatile price-wise in terms of history. I sometimes say it's a schizophrenic metal because it is a financial asset. It trades like, and it is a currency. It trades like a currency or a bill. If you look at the way gold and silver trade and the relationship between annual new supply of physical metal compared to the derivatives that's trading, they don't trade like commodities. They trade like the dollar and treasury bills and treasury bonds. There's people treat them as financial assets and as quasi-currencies, and that's as it should be. But silver also has a very heavy industrial use component, and that helps change its dynamics relative to gold. So it's a good complement to gold. There are periods of time when it outperforms gold. There are periods of time when it underperforms gold. And if you study the fundamentals and you keep on top of it and you don't get distracted by various conspiracy theories and paranoid ideations, you can actually do very well with your silver over time.
Great, and I kind of want to talk about that, point of where we are now, what we've seen in silver. I'm just going to go back recently, back to 2020. It seems like our entire world is is different since March of 2020. We saw silver, trading between 18 and 15 at that time. The March issues hit into the marketplace, and we saw it trade all the way down into the 11s. And from that, I think 1164 low in silver, we ripped to the upside. By July of 2020. We were testing almost $30 per ounce silver, I think $29.91. We saw pull back and put in it seems to be a base or support right around 22. The Wall Street bets came in February of 21 and pushed it to silver again. But from those retests, we've seen 28 in the highs, we've seen 27. We were in a downtrending market. But recently, silver broke above the 2440s area. Looks like it's broken above a daily downtrending trend line. And I know we have a weekly and monthly chart to think about between 22 and 28 in silver. It's kind of been our zone we've been in since July of 2020. But this recent downtrend, we seem to have broken over, got into the 27s, and have come back and retested this $24 level. Looking out over maybe the near to medium term, is this a breakout that you think might take us back to 28 to 30 or potentially higher? Or do you think we have some opportunities to have more accumulation back down in the 22 to 23 range?
It's quite possible that the price will spike higher, but I do agree with you that this $22 to $28 range looks pretty sustainable for the near term. If you go back to 2020, but if you go back a couple of years before that, for 2 or 3 years before 2020, you saw silver trading in, say, the 14 to 16.25 range. And what happened was in 2020, a lot of things were changing, and you saw silver move and break above that $16 level, and then it made a run, and it got up to 18, and then 20, and then 24, and as you said, it got up to 30 in early August. And that was in conjunction with a gold price move and a few other things that were going on at the time. It then subsided, and it has been basically trading in a broad range of 22 to 28. You mentioned the Wall Street bets guys, and it's interesting because they were talking about 30, then 50, then $100 silver. But the reality is that if you look at the trading data and the price information, their effort to, quote, squeeze the silver market had a one-day effect on the price. And it drove the silver price up to about $28. It came down the next day. We have seen the price trade up toward $27, $28 again since then, not because of anything that they're doing or saying, but because of the fundamentals in the silver market and the investment market. Back when silver was trading $14, $16, investors were kind of disinterested in silver. They were buying 40 million ounces of silver, physical silver, in 2019 on annual total silver purchases of physical silver by investors. They doubled that in 2020 to 80 million ounces, and the price went from $14 to $30 briefly, and it averaged probably around about $24, $26. And then in 2021, investors backed off a little bit from that bullishness, but they continued to build stocks, and you saw another 50% increase in the amount of silver that investors were buying. So investors bought 40 million ounces in 2019, 80 million ounces in 2020, and 120 million ounces in 2021. And the price, the consequence of that sharp increase in investment demand was to keep the price in that $22 to $28 range. Our short-term expectation is that we'll continue to trade in that range, perhaps on the high end, middle to high end of it. There's a war premium because of the Russian invasion of Ukraine. There's an inflation premium. We wouldn't be surprised to see the price soften a little bit in the second half of this year, but we think it's going to stay in that range and then start to move up in 2023. And as I think we've talked about in past videos, we still think that the price of silver can move sharply higher at some point between 2023 and 2026 based on a resurgence of investment demand once again.
And based on this longer term channel, it's almost been 2 years between this 22 and 28, and focused on that core position. If you're building your core position up down near 22 and you go a little bigger into 10, 15, 20, 25% of what you think you want to hold on to, when it gets back to 28, maybe you par that back again. So far over the last couple of years, that seems like a pretty good trade.
I don't see any reason for an investor to sell silver in the current range, 22, 28. I think that unless you're really a short-term type of person, what I really think is that this is a great base building period. It's sort of like, we've made this big advance from 14, 15, 16 to this level, and I think that we're consolidating here, and the silver market will wind itself up for another major move. Now, the last time, let's say it went from 15 to 30, that's a 100% increase, $15 move. Is that kind of thing possible again in the next leg up? Absolutely. And in fact, that's pretty close to what we're projecting.
Such amazing information as always, Jeffrey. And we remind our viewers and our listeners that we have the Precious Metals for More Than Just Inflation report, of course, authored by CPM Group. Also take the time to go to cpmgroup.com and get their quarterly and their other reports that they have available there. I know a lot of us still rely on some of those as well when we talk about these numbers and these ranges. It's a pretty good resource for information like that. So thank you again for being with us today, Jeffrey.